Hello everyone, myself ABHILAsh Borah, a research scholar in the Department of Commerce, Tezpur University. So today we are going to talk about the trading in Indian stock exchange. So have you ever wondered that how many people in India are actually aware about Indian stock exchange? The number is not very positive. Remember, I'm just saying that 63% of the people are aware about the Indian stock exchange, not they know or understand the Indian stock exchange properly. And whereas study says that only 9% of the people are engaged in Indian stock exchange. This is one of the biggest stock exchange and people are not even aware about this market. So our goal is to create a market inclusiveness where people from different background, people from different area can understand, and we are trying to simplify everything in a way that people can understand trade or do not have to scare about the Indian stock exchange or Indian market. So for that, we are coming up with 7 top Google questions which is related to trade. So first question is, what is trade? The answer is similar to the conventional market. This market also trades different kind of commodities, different kind of instruments. Here the instruments are not physical but technical. Here we are going to purchase certain things that is going to be recorded in our account, and if we can sell it at a greater price, then we are going to make some certain amount of profit. Okay, similar to the conventional market where the buyer, what they do, they go to the market with some cash, they purchase the product, bring it to the home and give money in exchange. Here the investors, what they do, they try to purchase the instruments of Indian stock exchange with the exchange of money, and they hold it for a certain amount of time. Here remember, certain amount of time, this time can be vary from the types of trade to trade. Okay, so for a certain amount of time, then after that, after increasing the value of that product, of that certain instrument, they sell it. Now the question is, what kind of trades, what are the types of trades are there? So as we have understood what is trade in the Indian stock exchange, it is similar to the conventional market. If we buy certain things at a lower price and if we sell it at a greater price, then we can make some certain amount of profit. Here the investors has to play both the role. They has to play the buyer's role as well as the seller's role. If you have to make profit, you have to see it from the perspective of conventional markets seller's perspective, where you have to buy it from a wholesaler, then you have to sell it to a person who are willing to pay a higher price, and this difference between the purchasing price and the selling price is going to be your profit. Now coming back to the next question, what are the type of trades are being traded in Indian stock exchange? Number 1 is intraday. Suppose if we buy a product, as the name suggests, suppose we buy a product in day 1, and if we hold it for, suppose for minutes, for seconds, or for hours, but not more than 1 day, then we sell it at a profit or it could be at a loss, then this trade will be known as intraday. Number 2 is delivery or positioning. So what we can do, we can hold this trade or we can hold this instrument for a longer period if we have enough money. Remember, if we have enough money. In intraday, we do not have to have all the required money, because this market, this broker is going to give us weightage. These things are going to be discussed in the later part of the video or in other videos. But here remember that in intraday, we do not have to have, suppose a sales price is 100 rupees. This market is willing to give us 5% or 10% of weightage, like margin. So in that case, we just only need to have 80% or the 70% of the shares price. Suppose the price of the share is 100, then we are required to pay only 70 rupees if we are purchasing in intraday. But in terms of holding, in terms of positioning, holding and positioning are both the same. If in terms of holding, we have to pay the whole amount. Suppose the price of the share is 100 rupees. If you want to hold for a certain amount of time, certain amount of days, because you think that this the price of that product is undervalued by the market, it is going to be rise within a week, within a month, within a year, then you can hold it for that amount of time where you have assumed that this product's price will be increased. So in that case, you have to pay the whole amount. The market is not going to give you any weightage. Actually, the market doesn't give you any weightage or margin. This or the leverage, this this broker is going to give you leverage. Okay, now we got to know that there are two types of trade. One is intraday and the other one is positioning on the basis of time. You just require to understand this much on for now. Question is, what exactly we can trade in Indian stock exchange? Many people think that only shares can be traded in stock exchange, but the answer is there are several things that we can trade in. We can purchase, sale in Indian stock exchange. List goes like shares. First of all, we all know what is shares. Shares is one portion of the total capital of a particular company. For example, the company MRF, for example, the company Reliance. Suppose you buy one share of that company, that means you are purchasing one portion of the whole capital, of that particular company. Suppose the company's capital is 100 and it is sliced into 100 pieces, and one piece is called as share. Similarly, debenture. What is debenture? Debenture is not share. It doesn't give you the ownership of the company. It is similar to the like a borrowing lending way of transactions. Now you go to the bank, you deposit some money. So ultimately that for example, if you have to buy a car, you do not have money for purchasing that or buying that car. So that now you do not want to or do not wish to go to a bank. You just simply go to a friend and borrow some money from that particular friend. For example, 5 lakhs. Now for that 5 lakhs rupees, you have get yourself into a contract that within that particular year or within that particular month, I am going to repay you with a particular amount of interest. And this is simply when you would do the same thing in the Indian stock exchange. This transactions, the instrument that holds the transaction is called debenture. The debenture has particular amount of interest. Suppose 9% interest, 10% interest, 11% interest. How many percentage of interest that the company is willing to give for that particular amount of borrowing. So this is debenture. Now the commodity. Commodity is something which is recorded in a digital form, but it is associated with the physical form of the actual product. For example, gold, silver, flour, rice, crude oil. There are several things that you can trade there also, and here in the similar to the conventional market. If you go to the market, if you buy a certain product at a lower price and if you resell it at a higher price, then this trade can be called as this transaction can be called as trade. Similarly, you can do the same thing in Indian stock exchange. You can purchase and sell the commodity as well. So market doesn't only give you the opportunity or doesn't only give you the liberty to trade in the shares, but also give you the liberty to trade in commodities as well. So this market is more diverse than you have been thinking of. So that is why just get yourself involved and learn about it. You will be fascinated by many other things as well. And we are not here talking about the technicality of the shares or technicality of the trading, which will be discussed in the later part of the video or in the other part of the videos. But here our simple objective is to make you understand what kind of trades are being conducted, or what are the types of commodities, what are the types of instruments are being traded in the Indian stock exchange. So fourth question is covered. Now let's move toward the fifth question. So the most Google question is that what are the documents is required to get yourself registered, or what are the documents is required to do trade in Indian stock exchange? The answer is very simple. What we need to have is just a PAN card, an Aadhaar card, a digital signature, and a photo. You don't need to upload a photo of yours. There you have to get yourself clicked a live photograph. So these are the all thing that is required to get yourself registered in a broker or with a broker. First one is Aadhaar card. PAN card, digital signature, and a live photo. That's all. You are ready to go, or you are ready to trade. Now the next question is, what are the prerequisites? What are the cautions that need to be adopted while entering into the market? Because many people have witnessed lots of losses. It could be similar to gambling, but this is not gambling at all. So this market can create a habit of, suppose you lose some money without understanding technicality, you get yourself involved into some trades, some intraday trades, and you make lots of losses. Now you cannot detach yourself from the market. So in that case, you have to understand the qualitative aspects of the market as well. So before getting yourself involved into the market, you have to understand the technicality of the market, the quantitative aspect of the market, as well as the qualitative aspect of the market. And most of the trader fails to keep up with the qualitative aspects of the market. So that is why and this is the only reason why most of the traders fails in the first stage. So remember, you have to have a qualitative clarity before entering into the market. So this qualitative aspect is very important. And what is qualitative aspect? The most Google question also involved that what are the qualitative aspects that is required to be remembered before entering into the market. So the qualitative aspects involves, or it encompasses, the skill. What are the skills? Skills to stay humble in the market. You have to keep an idea before entering into a trade that how much loss you are willing to make and how much profit you are willing to make in a single trade. We are talking about the intraday, or if suppose you are going to hold a share, taking the position of the share, you do not need to think about these things. Certain things you need to take care of, but in terms of intraday, you have to take care about the emotions that is going to make you purchase or sell. If you can hold that emotions stable, even if you're making losses, even if you're making profits, then you are good to go. And remember, consistency is the key. And also remember that most of the traders fails because they overlook and underestimate this qualitative aspect of the market, this qualitative aspect of this behavior. So this psychological behavior is very, very important. It is as important as the quantitative aspect. Suppose you understand all the tools and techniques, all the skills, or all the candle studies and all the technicality of the market, but if you do not know how to hold or how to control your emotions while trading, then you are not a good trader. You're not going to sustain for a long time. Now it is your responsibility how you're going to enhance that qualitative aspect of understanding that market, or understanding yourself first. So in other videos, we will be talking about that qualitative aspects, and my research topic is also associated with the qualitative aspects of the markets, or the behavior of the investors, or the people who are dealing with these stock exchanges. So I'll help you out with all those things with a very research manner. So what are the qualitative aspects you need to control? We'll be talking about that in the next videos. But here, I hope I have covered all the questions that are being top ranked in the Google search engine. So that is why we have come up with this 7 most important questions. And signing off for today. And I hope that we are going one step ahead for capturing our goal, which is market inclusiveness. Thank you so much. Signing off.